presentation under two thematic areas. So we will first cover COVID-19 protocols, and then we'll go through tax waste management. Thereafter, as Ajuba said, the floor will be open for questions. So under COVID-19 protocols, I have two areas, proposals that the Minister of Finance has presented to Parliament for their consideration. So it is not yet law until it is passed by Parliament and assented to by the President of Ghana and gazetted. And secondly, I'll take you through the rollout that the Ghana Revenue Authority are currently implementing under COVID-19 protocol. So in terms of the proposals to Parliament, I'll put them under four key areas. So the first one is corporate income tax, the second one is VAT, third one, personal income tax, and the fourth one, penalty amnesty. So the first one, corporate income tax, we have two areas. The first one is annual return. Ordinarily, companies are supposed to file their returns 4 months after the end of their financial year, but they have the option to apply to the Commissioner General for an extension of time of up to 2 months. But what the government of Ghana is doing is that they do not want businesses to go through that procedure of getting the permission from the Commissioner General. Instead, it will automatically grant 2 months extension for businesses in Ghana so that they will have that leeway to prepare their financial statement and return. The next one is donation for worthwhile causes. Under Section 100 of the Income Tax Act, before you can get deduction for donation for worthwhile causes, it has to be approved by the Commissioner General. And the Commissioner General has the discretion to determine whether your expense is a worthwhile cause, it's towards a worthwhile cause. But what the government is saying is that when it comes to COVID-19 activities, they deem it as worthwhile cause. So they will grant automatic deduction once you incur an expenditure in the form of donation towards COVID-19 activities. The next one is VAT, and it's in the form of a VAT relief, where if you donate goods and equipment in the fight against COVID-19, you are granted an exemption or a waiver. And this is different from you providing ordinary supplies of goods and equipment to fight COVID-19. It's purely donation. It is when you donate that you come under the waiver. The next one is personal income tax. And what the government is trying to do is to give individuals the leeway in terms of having to withdraw their provident fund, monies that they have saved in their provident fund. And in Ghana, provident fund, normally the employer and the employee agree in terms of the percentage that they want to contribute, and there are conditions that the employer will put to it. So once you satisfy that condition, you have the opportunity to withdraw from the scheme. But if you withdraw before 10 years in the formal sector, there will be a withholding tax of 15% that will be applicable. So here, what the government is trying to do is that the 15% that will ordinarily be applicable, they want to waive it. But we are hearing this morning that this will require an amendment to the Pension Act. So it may well be that Parliament will not support this relief that the executive has presented to them. The next one is penalty amnesty. What the government is saying is that if you are able to fulfill your tax obligations up to 30th of June 2020, then if you had any non-compliance prior to this period, then they will not impose any penalty once you pay the taxes. But we have identified a loophole in this proposal because we think that when it comes to penalties, in addition to penalty, we have interest. And under the Revenue Administration Act, penalty is different from interest. And in practice, you realize that penalty that normally the GRA impose are normally failure to file returns. And these amounts are not significant. 500 Ghana cedis plus maybe 10 cedis a day for default. And if you compare that one to interest, which is 125% of the Bank of Ghana interest rate, and it's applied on the principal amount of your tax liability. And that is very punitive. So if the government wants to give an amnesty, it should not be limited to penalty. they should include interest. And we've given them heads up, and hopefully they will do something about it. So that is about the proposal to Parliament. The next one is in respect of rollout that the GRA is currently implementing. And the first one is in respect of payment of taxes. Hitherto, most businesses go to their fiscal offices to pay their taxes. What the GRA is doing is that instead of going to their offices, because of the lockdown, make those payments by bank transfer or wire transfer. And they have given account details of the tax offices affected by the lockdown so that taxpayers can pay directly into those accounts. And there's another leeway in terms of having the opportunity to file your tax returns online. So you can sit at the comfort of your home and file your tax returns. And they have provided email addresses of their offices affected by the lockdown so that businesses can file their tax returns online. And it's also worthy of note that currently those offices affected by lockdown, the GRA is saying that they are working remotely, but we are not so sure how effective it is. So if you have a contact there, you can call the person if you are if you have any issue. So beyond these measures that the government of Ghana has put in place, internally as a business, what are the things that you need to do so that you'll be able to manage your tax risk exposure, especially in times of COVID-19, where most businesses are not doing so well? So we will start with VAT. Under the standard rate scheme here in Ghana, we have output VAT and input VAT mechanism. And I'll start with the left one, output VAT mechanism, and how to manage some of these risks. The first one is discriminatory discounts. And I would want to use the case of Eating Towers Ghana Limited versus Commissioner General as a case in point. So Eating Towers was into the business of providing or making their masks available to businesses. And what they did was that they provided a lower or a discount to Vodafone, whilst for competitors of Vodafone, they gave them a market price for their supplies. So, for example, if they gave MTN $100 in terms of pricing, Vodafone paid 75. So what the GRA did was that they said that they are disregarding, or they disregarded the discount arrangement between Eating Towers and Vodafone. So the discount that Eating Towers provided to Vodafone, they applied VAT on it because they said what they did was discriminatory and it was inconsistent with the VAT Act and the regulation of Ghana. So it's something that as a business you should be mindful. Whenever you are giving discounts, you have to make sure that it is not discriminatory. The second one is free samples and donation. In practice, sometimes businesses give free samples out as a form of promotion of their supplies. And in Ghana, under the VAT Act, if you give free samples, it is subject to VAT at the market price. So you have to be mindful whenever you adopt a strategy to give free samples so that you will not expose yourself. The next one is zero-rated supplies. Businesses may export their goods, and if you export your goods, it is zero-rated, but it can only be zero-rated if you have documentation to support that. If you do not have documentation, it will be disregarded, and the GRA will consider that those supplies has been undertaken within the jurisdiction of Ghana. So as a business, always make sure that you document. If you do not document, it means that you have not done what is needed of you. The next one is VAT relief supplies. In business, in some industries, the supplies of companies are subject to VAT, but the entities receiving those supplies are exempt from VAT. So the administrative procedure is that you, the person making those supplies, you should charge your VAT, but the other person receiving those supplies who is exempt will have to provide you with what we call VAT Relief Purchase Order, VRPO. And once they give it to you, you have to document it and show it as evidence of your VAT relief supplies. failure of which the GRA will not accept the point that your supplies are VAT relief supplies. We've seen situations where companies have huge credits in terms of VAT, but because they fail to account for the output properly, now the GRA are holding them in limbo and they don't know what to do because the GRA are demanding that they produce evidence of those VRPOs. And just imagine if you are in business and you've undertaken transaction for about 6 years, it's difficult to go back, but you have significant credit sitting in there. And VAT is near cash for you as a business. So you have to make sure that you document your VRPOs. The next one under output is charging of VAT on disposal of assets. Sometimes businesses think that, oh, the VAT is applicable on my normal supplies, your normal goods and services, and we do not advert our minds to other assets that the company may have, and from time to time they dispose of those assets. So once you dispose of those assets, whether it's a scrap, whether it's of low value or high value, you have to consider charging VAT unless it is specifically exempted under the laws of Ghana or under the VAT Act. So the next one on the right side is input VAT risk mitigation. In Ghana, once you incur a cost and there is a VAT component, you have to claim it within 6 months of accrual, failure of which you forfeit the claim of the input VAT. So timing is very important and you should make sure that you claim within the set period. The next one is keeping of the original hard copies of GRA pre-printed invoices. Businesses have the option of either invoicing their customers using pre-printed invoices from the GRA or using own computer-generated invoices. In the case of using GRA's pre-printed invoices, the requirement in practice from the GRA is that they need evidence of the hard copies. But what we realize in practice is that some of the businesses keep those documents in soft copies. In an audit, when GRA demands of those hard copies, you are found wanting, especially when there is change in management. Maybe you'll be doing it for 3 years, then a new person comes in and there'll be challenges in terms of tracing the original copies. And a lot of businesses are being denied the claim of their credits, which are duly due them, but the GRA will not buy into that if you do not have hard copies. So please make sure that you have all the hard copies of VAT that you claim and you want to get credit for. The next one is entertainment. Ordinarily, once you incur entertainment towards your business activities, it's strictly non-claimable unless you are into entertainment business. So please do not claim input VAT on entertainment. If you do, it will be disallowed and you'll be exposed to penalty and interest. The next one that I see often happen is that most businesses, once they file their VAT returns, they think that is the end. When the GRA comes for an audit, they will get a credit and they'll be able to apply for refund. But the procedure is that you have to complete a VAT refund claim form and you have to periodically do so. And it's very critical. If you do not do that, in the end, if 3 years passes, you lose everything because under the law, in terms of VAT administration, if you fail to apply for VAT refund within 3 years, you forfeit everything. And I have several of these things being brought to my attention because businesses failed to apply for the refund within the 3-year period. So please, if you have VAT credits and it is standing in your books, apply for the refund and complete your forms. Because as I said, VAT is a near cash for you and you should be able to apply for same. Most of the time, maybe businesses will say, oh, if I apply, the GRA will come to do an audit. So assess your situation. If you are in good standing and you have a significant credit, go ahead and apply. If you don't apply, you forfeit everything. And sometimes the credit runs into millions of cedis and US dollars. So please, let's comply accordingly. And following the tax audit, you have the leeway of utilizing your credit that you have gotten from the VAT against your other liabilities. Under the Revenue Administration Act, businesses have the opportunity to do this set off. But prior to the coming into force of the Revenue Administration Act, these administrations were limited to specific tax types. So VAT, you cannot set it up against income tax. But under the new Revenue Administration Act, you can do that set up. And in practice, we've seen situations where the GNRA, because the old law favors them, they tend to use it against taxpayers. But as a taxpayer, you should be aware of the law and challenge the GNRA to do the right thing. So once you are able to do all this, you'll be able to have your credit so that you wouldn't have to go and pay a direct tax. Meanwhile, you have input VAT standing at your credit, especially in times of COVID-19, where some businesses are not doing well. So the next one is internal risk controls that you have to put in place to ensure efficiency in your VAT administration. The first one is using own computer-generated invoices. If you want to use the GNRA pre-printed invoices, it means that you have to physically deliver your invoices to your customers. And most of the time, businesses the company would want to see the physical invoice before they make the payment. And with COVID-19, as much as possible, you should try to avoid those physical contacts. So if you have not already applied for own computer generation, please do so. But you can only do so if you have a robust system in terms of how to manage your invoicing. And the GNRA will also look out for the competency of your personnel who will be manning your computer system. So once you have all these things in place, it's more likely than not that the Commissioner General will give you the approval. So you have to consider using this if you are currently not doing that. The next one is tax health check. What we have realized is that sometimes for tax efficiency purposes or cost control purposes, businesses would want to do some aspect of their tax function internally. That may be great, but as time goes on, you have to do an introspection to assess whether what you are doing is the right thing. Because even in health-wise, as human beings, it is advised that from time to time, you go to the hospital for checkup. So if you are running your business for a long time, 2, 3 years, 5 years, and you have not assessed the health status of your tax function, then it means that you are heading into trouble. So please, on periodic basis, try as much as possible to assess the health status of your tax function so that you'll be in good standing. There could be changes in law, or you may have engaged in complex transactions and there could be exposure. If you keep on doing those things, there will be a multiplier effect for your business. But if you are able to involve experts, you'll be able to become aware of that and be able to solve those problems. The next one is monthly filing. What we have realized is that, for example, under VAT, some businesses think, oh, VAT is easy. So they tend to use the most junior staff to do the work. But remember, VAT is an area that you can really get cash benefit from. So you have to put competent hands in there. So make sure you have a preparer, a first reviewer, a final approver, and at all times, make sure the staff is competent. If they are not competent, get them to have training to bring them abreast with what is required of them. And the last one under input VAT is documentation. If you have huge VAT at the credit of your return and you do not have documentation to support it, there will never be credit for you. So always keep your documentation, and the law requires you to have the documentation kept at least 6 years. So please, let's ensure we do that accordingly. The next one is income tax. And under income tax, I have on the left side withholding tax and on the right side corporate income tax. So under withholding tax, the first item is tax efficiency. And it's a way of managing your cash flow. If you provide services and you are subjected to withholding tax, it means that the person will not pay you the full amount, and a part of your income will be paid to the tax authority. Maybe you are running a tax loss position currently. It means that businesses should not be withholding on the payments to you, but because you have failed to have this exemption, you are having to forfeit those cash that should have ordinarily come to you. And you have an opportunity to apply to the Commissioner General if the company is in good standing and the directors of the company file or have filed their annual returns. That is so important because we have seen that many businesses are in good standing in terms of tax, but their directors are not filing their returns. So please, before you go and apply for the tax exemption, make sure that all the directors of the company have filed their returns. The next one is matching your supplier credit agreement with company's cash payment period. What we have realized is that companies do not match the timing of when they have to pay their suppliers and when internally they have agreed with their customers. Under the tax laws of Ghana, payment in terms of withholding tax is due at the earlier of when it becomes payable or when it has been paid. So once it becomes payable within 1 month, it means that the withholding tax should take place within that 1 month period. But we realize that some businesses may not have enough cash, or internally in their minds, they will pay you 4 months later or 5 months later. Once you do that and you pay in 4 months or 5 months, it means that you have exposed yourself, because your credit arrangement with your supplier is for you to pay within 1 month. So if you do not do that, you have exposed yourself. So it's better to say that in your credit arrangement, it's a 6-month period, so that if you pay in 6 months' time, it will be in consonance with the law. The payable period will be in alignment with the time that you are making the cash payment. The next one is risk in terms of withholding tax on reimbursement. Ordinarily, if you are a finance manager, when you hear reimbursement, you think that, oh, reimbursement is not subject to withholding tax. But hey, you have to have a reload. In the case of Beardoff Ghana Limited versus Commissioner General of Ghana Revenue Authority, we realized that there were invoices from the distributors to Beardoff, and embedded in those invoices are third-party invoices to the distributor, and the distributor described it as reimbursement. But when the GRA looked into it, they realized that it was not mere reimbursement. It was services that were provided by the third parties to the distributor, and therefore, had those services been provided directly to Beardoff, it would have been subjected to withholding tax. So what the GRA did was to apply withholding tax on all the reimbursement and surcharge Beardoff. Beardoff challenged it, but the High Court had upheld the position of the Ghana Revenue Authority. So as a finance manager, as a CFO, please make sure that you always look into the reimbursement and ask yourself, ordinarily, would I be required to withhold those payments or not? The next one is discounting. And it's something that is gradually becoming a serious issue. And I want to use FundMob Limited and Commissioner General of Ghana Revenue Authority as a case in point, where discounts were given to distributors of FundMob Limited here in Ghana. And what the GRA said is that those discounts were not mere discounts. They were in fact commission chargeable by the distributors to FundMob, for which FundMob should have withheld on those payments. So because of that, GRA recharacterized the transaction, deemed it as commission, and withheld taxes on it and imposed the liability on FundMob Limited. So it's something that as business, you have to be careful when you are structuring some of these transactions. You should not take it lightly. You should involve your advisors and assess the situation, whether it is in consonance with the laws of Ghana. And that, in terms of the corporate income tax on the right bit, we have carry forward of tax losses. In COVID-19 period, there are some businesses that will be making losses, and the law allows businesses to carry forward their tax losses. For those in the special industry, the law allows you to carry forward the losses for 5 years, and those in other industries, the law allows you to carry it for 3 years. So if you are making losses and you foresee you are going to make income in the future, you are covered in terms of how you treat those losses. And once those losses are recoverable, you'll be able to recognize those losses as a deferred tax asset in your financial statement as well. The next one is filing in foreign currency. What sometimes when we are reviewing the work of clients, we see is that sometimes if you are reporting in the local currency, companies will have huge foreign exchange gains. But if they were to report in foreign currency, you realize that those gains will not be taxable. There will be no chargeable income for those businesses. So what our advice to businesses is that always assess your situation. Is filing in foreign currency best for you, or filing in local currency a better option? The local currency filing is an automatic requirement of the law, but once you have good grounds to file in foreign currency, you have an opportunity to apply to the Commissioner General to file in foreign currency and do so, so that you limit yourself to these unnecessary exposures. The next one is transfer pricing. Increasingly, it's an area that the GNRA is becoming interested in, because companies are shifting profits to outside of Ghana to reduce their tax liability. And they are building their capacity, and they are signing agreements with other countries so that their personnel will be well resourced. And we have transfer pricing regulation, and in practice, the Commissioner General will normally rely on OECD guidelines for his interpretation. But where the OECD guidelines is inconsistent with the TP regulation, the TP regulation prevails. And one thing that we have realized in practice in tax audit is that the GRA is gradually looking into transactions, intercompany transactions, whether those transactions were approved by the board of directors of those companies. Because what they are saying is that if they are not approved by the board of directors of the company, then it means that the parent company or the affiliate are imposing something on the company in Ghana, which hitherto maybe is not necessary for the company. So please, if you are managing a company, for a director of a company, as part of your transfer pricing, make sure that every transaction that you have with your parent company in respect of intercompany transactions, please, it has to be approved by the board of directors to avoid this kind of controversy with the tax authority. And the next one is intercompany loans. And in compliance with OECD, it has to always be at arm's length. And a typical situation that I've seen happen in recent times is that sometimes a company in Ghana, a subsidiary, may be operating well. Initially, it may not be doing well, and the parent company will be providing loans. But subsequently, the company may be in good standing. Maybe their income and their cash flow far outweighs their expenses. But you see that there are new loans agreements between the parent company and the subsidiary. When that happens, you realize that the GRA will disregard that arrangement, because how can a company with excess cash still procure loan from their parent company? So they will disregard such an arrangement. So please always scrutinize your financial position, your cash flow position before entering into that arrangement, and make sure that all your transactions are arm's length and you have sufficient documentation to support your benchmarking. The last one is personal income tax and pension. And the left side, we have experts. Once you are an expert here in Ghana and you are resident and your contract period does not exceed 6 months, and there is evidence that you contribute to similar scheme in your home country, there's an opportunity for you, if you are already not doing that, for you to be exempted from the pension fund here in Ghana. The next one is in respect of resident individuals. And if you are a resident individual, these are some of there are 2 ways among others that you can use to manage your cash flow. The first one is mortgage interest. And this is a personal case that I took to court. So it's a case of Kwasi Owiredu versus Commissioner General. I spent 2 years with the GRA trying to tell them that how they treat mortgage interest in Ghana for the past 13 years was inconsistent with the laws of Ghana. And they were not budging. And I wrote them letters 3 separate times so that I'll get their response. But when the response came, it was negative. So I took the matter to court, and the High Court ruled in my favor. What the GRA was doing was that they were denying upfront deduction of mortgage if you have a mortgage with a bank here in Ghana. And they say that file at the end of the year. And when you file at the end of the year, your personal income tax return, they will have a look at it and grant you a credit. And even sometimes they even don't decide not to even give you a cash refund. They just give you a credit. So instead of getting those monthly benefits, it is deferred into 1 year time or 1.5 years time. And those bureaucratic processes, there are so many individuals that do not want to go through, and at the end of the day, they do not get those benefits. So I took the matter up And the good news is that the court's good in my favor, and currently I'm enjoying the monthly benefits, and it's very significant. So if you have an employee who has a mortgage, or as a CFO, you also have a mortgage, make sure in this COVID-19 difficult times, you get this relief for your employee and for yourself. So the next one is bonus. It's always advisable that you do not put all your eggs in terms of preparation into salaries and allowances. There are reliefs in the tax relief in the bonuses. So please have a look at how you rate your employees, and where there's an opportunity, give them performance bonuses so that they can also enjoy this relief under the tax law. Thank you very much.
Thank you very much, Kwasi. I believe that we have a question via instant messaging from Steve Gray. If exports are zero rated, how does GRA recognize the export of services which are unlikely to have documentation other than the invoice and contracts? Kwasi?
Yeah, so in terms of services, it's quite easier because that's the only key evidence that you have available. So normally the GRA are unlikely to challenge. It's in respect of goods that normally the challenge comes. So once the invoices shows the foreign address and payments have been made from outside of Ghana into your account, then you should not have that difficulty.
We have another question from William Glover of Guinness Ghana Breweries Limited. He says that he realizes that employees are not taking advantage of the personal reliefs, and so he would like Kwasi to talk about that as well.
Yes,
and encourage people to take advantage of personal reliefs.
Yeah, you know, recently the government has increased the amount. Hitherto it was really very small. That's why individuals are not applying. It's not automatic. You have to apply to the Commissioner General, and the Commissioner General will give you a tax relief card, and that tax relief card you give to your employer. So as an individual in COVID times, every money counts. So please try and take advantage so that you can also get the benefits.
And Festus, your question.
Okay, thank you. I'm Festus from a senior tax advisor to Untitled Ghana Limited. First, I have to congratulate Kwasi on his ruling on the mortgage. It has not been easy at all. The GRA has been tormenting people and other organizations. And my only hope is that they will respect the ruling. You did a very good work by taking it to court. Not all the companies are prepared to go to court on issues like this. So I'm only hoping that the GRA will respect the ruling and they will not keep on disturbing people again. Once again, I thank you for the good job that you did, and really appreciated by others all. My question.
Thanks, Festus. And for your information, I'm enjoying it, and I know others that are enjoying it. Yesterday, I had someone that I don't know, and he was also congratulating me that he's also enjoying it. So from GRA side, I hear some of them too are happy because some of them also have mortgages and they are all enjoying it.
Oh, okay. Okay, but my first question is on the Vodafone case that you said you mentioned.
Yeah.
That about this discrimination, that when it got to the court, they deemed it as a discrimination, and as such, they had to impose tax on it. Is it GRA? Is this discrimination only applies to companies, or it applies to GRA? Can GRA discriminate because they are the tax authorities? Like they will apply some taxes to a certain company and not apply to other tax. If such things happen, what do you have to do as a taxpayer? Do you have to go to court, or you have to draw the attention of the Commissioner General?
Yes, and sometimes we should not leave it at the level of the tax officers that comes to the field. If you have a challenge, it's better to bring it to the attention of the Commissioner General, and for the Commissioner General to put those representations into writing, so that if you are going to court, you will have evidence. Because you do not want to go to court and make your submissions, and the GRA will come back and make a representation that is totally different from what happened on the ground. So yeah, the Commissioner General to put their response into writing. Once you have evidence and their grounds is inconsistent with the law, you have that leeway. And I will rather encourage companies to go to court if they find what the GRA is doing is inconsistent with the law. And for me, once I realized that what they were doing was inconsistent with the law, that's why I took them to court. And people have the misbelief that if they take the GRA to court, the GRA may be pouncing on them or they'll be a target. Those are times of the past. I think with a new dispensation, they are rather telling GRA customers that if you are not satisfied, go to court, go to court. So I think if you are dissatisfied with their position, just make sure that your position is grounded in law, not in practice. Make sure it is grounded in law. Once it's grounded in law, I think we have a fair tax system. Because when I went to the court, realized that from my experience, it's a fair system we have. And if you have a good case, you have a good case. Yeah.
Okay, thank you for this, Kwasi. My next question is, you know, you mentioned when you're talking about the transfer pricing, you are talking about intercompany service charge.
Yeah.
Does it apply to a branch? Assuming a company is in, say UK or say Holland, and it has a branch in Ghana, does intercompany service charge apply?
Does
he's asking whether inter-service charges under the transfer pricing laws apply to a branch. So if a company is located in, say, Holland, I think he said, and they have a branch in Ghana, would, under the transfer pricing law, will that inter-service charge being at arm's length, must it apply?
Yes, it does. It's not limited to subsidiary companies. Once you have an external company in Ghana and you do intercompany transactions, it comes under our TP rules.
Even if it is a branch?
Yes, it is a branch. You know, the branch will create a PE, and always you have to find ways to attribute income to the PE in Ghana. So if payment that will reduce the income attributable to the PE, and it's not at arm's length, then the Commissioner General has the right to disregard that arrangement, and it's within the transfer pricing regulation. And if you look at regulation 1 or 2 or thereabouts, it gives that indication that PE are affected by the rules.
Thank you very much, Kwasi and Festus. We have some other questions. Hello, Festus.
Oh, please, my last question. My last question, please.
Okay, Festus, please go ahead.
You talked about the discount case, the one that the court classified it as a commission. Is this something that was based in the tax law, or they look at it from the point of view of the transaction, or it depends on how the transaction is structured?
Yeah, it was a combined effect. They look at the transaction and they use the general anti-avoidance rule under the Income Tax Act.
Yeah.
Anti-avoidance rule. If you do such an arrangement and it will reduce tax payable or it will create a tax benefit, the Commissioner General has a right to disregard the arrangement. And in that case, you realize that it was purely an agent and principal relationship between FANMO and their distributors. And if you look at the contract, you realize that no, it was not a mere cash discount that you are ordinarily giving to your customers. So it was a situation that they looked at the company's transaction, and because it was inconsistent with the Income Tax Act, they disregarded that arrangement.
Oh, thank you very much, Kwasi, for this. This is quite helpful. Thank you.
Thank you, Festus. So the next question we have is from Richard Obu from Contractor. He says that a firm structure is such that revenue earned from contracts in Ghana from the government of Ghana excludes VAT. However, the firm pays input VAT, and this has increased the cost of operations. He's asking whether you can suggest any remedy.
So, you know, when it comes to construction contracts, it depends on the kind of transaction. There are some supplies where the VAT applicable is standard rate. If the VAT that is applicable is standard rate, it means that regardless of the fact that the government will not be paying the VAT, because it is a standard-based supplies, you should be able to claim your input VAT. The problem arises where maybe your construction project is an exempt supply. If it is an exempt supply, it means that the input VAT is not claimable. And sometimes it is a combined effect. It's a mixed supply. Some portion of your supplies are taxable, others are exempt. And the law requires you to do an allocation so that those that relate to those that are taxable, you claim input VAT in respect of that. So you have to assess your situation and see where you find yourself. And because if you make all your supplies are exempt, really, there is nothing that you can do.
Is that okay?
Kwasi, okay, so in relation to this question, we do not have exempt supplies, except for, let's say, even where you import, you pay at the port. And so it looks like this is a one-way affair, where VAT is not part of the exemptions the company has. However, input VAT is not exempted, and therefore the company has to pay the input VAT almost every now and then.
But do you charge VAT on your supplies to the government?
No.
What is it, because your supplies is exempt?
So let me explain this structure. This is contracts are being paid for by ECAs, export credit agencies outside of Ghana, and the contract sums that have been agreed upon in the contract does not include VAT. And therefore, the sums that are paid by the financing organization, let's say a Dutch bank or SEARCH or some other European financial institution, is just the raw contract amount that has been agreed, excluding any form of VAT. However, imports that we are bringing into Ghana, you notice that there are some that are exempted under the contract exemption. Some of them are exempted clearly, but purchases that we would make in Ghana does not fall under any of those exemptions. And therefore, we are supposed to pay VAT on almost all purchases that are done in Ghana.
I think once you fall another category and your supplies are exempt because of the agreement that you have with the government of Ghana and the financiers, I think there is little that you can do in terms of claiming the VAT. You only have to expense it through your corporate income tax.
Okay, all right.
Okay. So Richard, perhaps you and Kwasi should be able to continue the conversation if you need further clarity after the webinar.
Sure.
We have a question from Noble from Petra Trust. He wants to know whether you actually said employees have to apply personally to the Commissioner General for relief, tax relief, before a relief for like a marriage can be granted. So I think
Yes,
he's looking for further clarity.
Yeah, it's a personal responsibility of the employee. But we know that sometimes if the individual is at the top ladder of the organization would want to assist, but it remains the responsibility of that individual.
Noble.
Hello.
Yeah, has your question been
Yes, I can hear
answered?
you.
Yes.
Yes, but for some time now, people gave us their certificates. So if they are married, they gave us their certificates, and we just went ahead to grant them the reliefs. By hearing this, I think we need to tell them to do the right thing by, applying themselves and then getting the cards, as Kwasi has said. And I don't know whether what we've been doing is wrong, because we think that the section has specified clearly the amount that we need to relieve from them. And if the person comes or the employee comes and says that they are married and they give us a support like the marriage certificate, and maybe they have kids, a support of their birth certificate. We thought it was an enough documentation for us to go ahead and grant them the release. But with Kwasi's enlightenment, I think we need to do the right thing by going to, by going back to asking them to go and see the commissioner, okay, for them to file and then get a card. So it's well understood. Thank you, Kwasi.
Yeah, you're welcome. Actually, the law requires that the individual be given tax relief card, and that tax relief card will be given to the employer before the employer goes ahead to give the deduction. So a procedure will have to take place before the employee can get the benefits. So please try and correct the anomaly.
Okay. Thank you.
Thank you.
Okay, thank you. Any other questions?
Yes, this is Ogu.
Okay, please go ahead.
Okay, so Kwasi, this is on annual returns filing for employees. So I've looked at the Tax Act, and instances where an employee has income only from employment, the Act says it is not mandatory for such persons to file annual returns. I have seen organizations at the end of the year try to file employee annual return for all employees. And is this practice consistent with the law, since what they are filing is the same as the amount that has been withheld and paid already on a monthly PAYE withholding schedules?
Yeah. One thing you should be aware is that the law has been changed. You know, under section 125 of the law, it was not required if you are only an employee with employment income, but they have changed the law. So once you are an employee, even if your source of income is in respect of just employment income, there's a requirement for you to file your annual return. So there has been a change in law under the Income Tax Act. So when the Income Tax Act came, they repeated what was in the the Act 592.
Yeah.
Now the change in law requires every individual to file your annual return once you earn an income in Ghana, regardless whether your source of income is only employment income. That's why you see employers assisting their employees in the filing of their annual returns.
Okay. Right. Okay. So, Richard, I think William has sent you a message that you should refer.
Yes, I've seen it.
Okay, that's fine.
I've seen it.
Any other questions? So it appears that we do not have any more questions. If we do not have any more questions, then I would like to bring this webinar to an end. Thank you very much, Kwasi. I believe that this has been a very thought-provoking presentation that you've made. Given that we had 33 participants, which is more than our last webinar, I believe that tax is an issue that our members are very, very interested in. And so what we'll do is that we will, like I said at the beginning, we will put this presentation on our website afterwards, and we will put you in touch with Kwasi at EY. And if you have any further questions or you'd like clarification on anything that was not clear, you can reach out to him directly. But one of the things we also do at the chamber is we undertake advocacy on behalf of our members. And I believe the issue about the COVID-19 stimulus package and the amnesty on penalties and the lack of clarity on whether this includes interest payments is something that we are going to take up with the tax policy department at the Ministry of Finance, and we'll be giving everybody feedback on the outcome of that. Thank you once again, Kwasi, and thank you also to all our participants. Our next webinar will be on business continuity management, which we think is very, very, very necessary in this time of partial lockdown amid the COVID-19 pandemic. And that would be hosted by Standard Chartered Bank, a platinum member of our chamber. And so we'll be sending out the invitations either today or tomorrow when we have agreed a date with them. And I hope you will all participate again. Thank you. Kwasi?
Yes.
Do you want to say any last words before we end the webinar?
Yes, you know, COVID-19 is really affecting most businesses, but as we normally say, to every problem, there's an opportunity, and businesses exist to create solutions for the problems that we have. So at this point, if you intend undertaking a measure or a reorganization or acquiring an entity, look no further. We are well prepared to help you in this challenging times. And we have our advisory team, we have transaction team, we have tax team, we have assurance team. So we will bring the whole of UI to your doorstep to assist you overcome these challenging times. Thank you.
Thank you, thank you. And I forgot to add that EY Ghana is also a platinum member of our chamber, and we're very grateful to the team at EY. Thank you, everyone. Bye.
Bye.
Bye.